Welcome to our quick tax guide on vehicle reimbursement programs, particularly FAVR and allowance programs, as we head into the 2025 tax season. Whether you're an employer or an employee who drives for work, understanding the latest IRS rules can help you avoid tax trouble and unlock real savings. Let's dive in. Every time an employee uses their personal vehicle for work, think sales calls, site visits, or client meetings, they incur costs, fuel, insurance, wear and tear. A well-structured reimbursement program covers those expenses fairly and, if done right, can be tax-free for both employers and employees. And here's why it matters even more. W-2 employees can no longer deduct unreimbursed vehicle expenses on their taxes. That deduction disappeared with the 2017 Tax Cuts and Jobs Act. So, a compliant reimbursement plan is the only way to offset those costs tax-free. For 2025, the IRS standard mileage rate is 70 cents per mile, up from 67 cents in 2024. This rate is the maximum employers can reimburse tax-free under the cents per mile or accountable allowance program, as long as IRS rules are followed. Any reimbursement above 70 cents per mile is considered taxable income. That's why accurate tracking and correct plan setup are essential. FAVR, fixed and variable rate, is one of the most precise reimbursement models. It separates fixed costs like insurance, depreciation, from variable costs like gas and maintenance, tailored to regional rates. To stay tax-free, FAVR programs must meet IRS rules. Employees must drive at least 5,000 business miles per year. Vehicles must meet age and value limits, typically under the IRS's luxury vehicle cap, around $60,000, and employers must maintain detailed mileage logs. If all of this is followed, the entire reimbursement is tax-free, and it can reduce payroll tax liability for employers. An accountable allowance, also known as a tax-free car allowance, is a monthly payment for business driving. To stay tax-free, the per-mile rate of the allowance must not exceed the IRS rate. In 2025, that's 70 cents per mile. Let's say you pay an employee $1,000 a month, and they drive 1,000 miles. That's $1 per mile. Only the 70 cents per mile is tax-free. The remaining 30 cents per mile is taxable income and must be reported on the employee's W-2. Cents per mile is the simplest method. Reimburse employees for every business mile driven, up to the IRS rate. In 2025, that's 70 cents per mile. Pay that and it's tax-free. But like all accountable plans, you must keep accurate records. Date of each trip, start and end locations, purpose of the trip, and total miles driven. No logs? The IRS treats it as an unaccountable plan, and it becomes taxable. If there's no documentation, or if you don't adjust for excess payments, it's called an unaccountable plan, and the IRS considers the entire allowance taxable income. That means income tax, Social Security, and Medicare apply, and it must be reported on the W-2. If you're a 1099 contractor or self-employed, you won't receive tax-free reimbursements. Instead, you can deduct mileage on Schedule C using the IRS standard rate. Just be sure to keep good mileage records. No matter which program you choose, staying tax-free comes down to compliance. Here's what the IRS expects: a clear business connection for each trip, timely, accurate mileage logs, any extra funds returned or adjusted. Vehicles in FAVR programs must meet age and cost thresholds, and if a program doesn't qualify, it must be reported as income on the W-2. Employers, review your reimbursement policies now. Confirm your rates are compliant with the 70 cents a mile guideline and ensure logs are in order. Employees, double check your logs and make sure you understand how your reimbursement will appear on your tax documents. Planning now, avoid surprises later. Whether you use FAVR, tax-free car allowance, or cents per mile, the 2025 IRS rate offers a great opportunity to stay compliant and tax efficient. Just remember, good records and smart setup make all the difference. If this video helped, like and subscribe for more updates on tax law, vehicle reimbursement, and business travel. Until next time, drive safe, track your miles, and consult a tax pro if you're unsure.